All right, good evening and welcome, traders. It is Tuesday, January 30th, 2024. Let's get into the markets and trades. I'm going to share a little bit of my trading portfolio today. We're going to go through some of the positions in that as well. We'll talk about some of the trades we closed today and some of the current adjustments that we're doing. So I'll give you guys a little bit of a peek inside what I'm doing here as well. But overall, a good day in the markets. We did make some more money in the portfolio. We'll cover that with you as well. But first off, let's dive into the overall markets and see where things are this evening. I will get my video off here so you guys can see the entire screen, and let's just jump into it. So the S&P was down about 3 points today. SPY down again 0.38%, 0.38 points. Just sitting on this daily and this weekly, we're just sitting right near these all-time highs that we just made. Up decently, this morning a bit, settled off of its highs and closed down just fractionally on the day. Overall, we are still above the 3 ATR on the daily. We are above the 3 ATR on the weekly. What does that tell me? Even though we're in a solid uptrend for every metric there is on the weekly, that I don't really want to put on a whole lot of new bullish positions here. I want to let this thing come back and take a little bit of a breather, maybe back to the 21 EMA. Even the 50 would be okay. We'll see it's about a 6% drop to the 21 and probably closer to a 9% drop on the weekly to the 50. Either one of those would be good or anything in between. But right now, just a good bullish trend on SPY. We look at the daily, pretty much the same thing. You're in overbought, squeeze fired, moving up, hitting new highs. What's the not like right now, except the fact that, again, I think you're overextended and you got to be a little bit cautious right now. And then if we take a look at the Qs, kind of similar, but not quite as strong on the daily. It's really been struggling to hit any kind of new highs. RSI is just tipping over, MACD is tipping over, the squeeze is long in the tooth, and we are no longer above the 3 ATR level. So this one's starting to come back in a bit on the NASDAQ, and I expect that tomorrow we're going to see this thing pulling back more with some of the earnings results tonight that's sending stocks lower after hours. But we are above the 3 ATR here. Definitely can see these long wicks to the upside, showing that the bears have kind of won the weeks. Even though the bulls are pushing it higher, the bears have not let it get to that point. So either the bulls are just running out of steam, or the bears have just enough to keep us from hitting some new highs. I like this a little bit better with this pullback. I think a nice pullback here would be absolutely warranted. We take a look at IWM. As with the other two indexes, closed off of its highs for the day. Did try to tick up above here yesterday. We couldn't quite get to that level today on the week, so we're definitely off our highs on the week. MACD is heading lower, but you got RSI and squeeze powering higher. A little bit of a divergence in the force here on the weekly, so we'll see what happens overall. And on the daily, though, it still looks to be fairly strong. And I would think that if you extend this line out a little bit here and you take a quick look without getting too many things going on this, you can see a nice ascending triangle here that we couldn't break and keep momentum. We pulled back today, but we're still, this is still a live trade opportunity. We'll see what happens. I think if we get some pullbacks in the NASDAQ and the SPY tomorrow, you could see this start to power higher. And I really think maybe some trades on RTY might be interesting right now, even though the liquidity is not fantastic in that underlying. I think you got to take a look at it and see what you can do to get a bullish trade on IWM going here, because I think SPY and the Qs going to get a little bit of a pullback tomorrow. All right, let's skip through everything. Let's just talk quickly about the VIX hitting some, not new lows, but just hitting some lower marks here. I'm going to actually put on my 50 level here and keep an eye on this as we're struggling with it, but failing at it. And VIX heading to the downside, although, again, we get some selling going. I think this could easily reverse. You are in a squeeze. It looks like the downside would be the direction, but I think tomorrow this might get a little bit of a pop. So we'll keep an eye on what's happening here, but I think we could see a bit of a pop tomorrow in the VIX if the markets start to sell off a bit. Taking a look at the US dollar on the session today, it did close fractionally lower as it just continues to trend sideways, sideways, sideways. Not really any indicators of direction here. The weekly is telling you the possible direction may be up. Got MACD improving, RSI moving higher, and the squeeze running out of the downward momentum and starting to turn. So the dollar could see a little bit of a bump here. And then on the 10-year treasuries, we're seeing the back to the trend line we go. We're seeing those rates tip off a little bit lower again here. So this rally that we've had in the rates starting to just wear out a bit and now pulling back again. I don't think we're going to see a major sell-off. And if we look at the momentum on the weekly, it's been fairly positive on the MACD, the RSI a bit positive until this week. And you're getting the squeeze long in the tooth here. So I think of the bearish move here, this could be running out of steam and we could see some bullish movement higher while we're seeing bearish on the daily. So I like where we are in here. It's kind of in a no man's land, and I think that's really going to set bonds up for some good trades. All right, so taking a quick look at the Aussie dollar on the session. It did drop on the session and is falling a little bit more in after hours. With the dollar here potentially trying to move its way higher and just holding its course. But as overall, you're just seeing this same sideways movement, but breaking out of this downtrend that it has going. This downtrend still in play, and we'll keep an eye on this overall downtrend that is in place on the weekly, even though we had a little bit of a pop above and then a fail at it. I think you're just holding in there, so it's not too bad. The weekly is still bearish. The daily is a bit bullish, at least for sure sideways. It's just not very bearish at all. So I think it lends itself to another good strangle opportunity. I'm going to just cover the euro as well. Kind of the same thing. You're watching this downtrend here going on the daily. But it's trying to find some bottoming in here as it's holding on to this 200-day moving average. And if you take a look at the weekly, we've been heading down. So again, a bit of this yin and yang thing going on. Certainly interesting to watch. Overall, oil had a pretty decent day today. So let's take a quick look at where we are. This uptrend continues to be in place. So the uptrend is nice. And on the day today, we had a pretty nice bounce here off of these lows. It dipped briefly below the 9 and then just rallied higher and closed above the 200 and just fractionally flattened after hours. But PSAR is bullish. MACD had been a bit bearish and tipping over, but the squeeze had fired to the upside. RSI has been rising on this thing. So, it looks still pretty decent. If you want to call this an ascending wedge and it broke out, I think you can probably do that. And you've got the 9 moving higher, the 21 about to break above the 50 if we stay up in this range for another day or two. So I still do like where oil is. I do like this recovery that it's been having. MACD, RSI, squeeze reversing now the last two weeks with a bullish PSAR reversal. I really like where oil is positioned. I think it's a bit more bullish right now than anything else. If we take a look at gold, taking a look at our gold positions in here, which we'll check in just a moment. This thing's been weakening on the MACD, the squeeze, the RSI for several weeks now, but it bounced off the 21 EMA on the weekly. MACD, RSI starting to curl up a bit on the weekly with this week's move. And this week's move has been pretty solid so far. So big gap up on Friday, and then a big move on Monday, another decent move today. Even though it finished off its highs, you got a bullish PSAR reversal in play, breaking the downtrend to the upside. You've got the 9 breaking above the 21, which is above the 50, which is above the 200. So overall, I like where gold is. I'm pretty bullish on gold here as well, or at least continuing to be sideways. But I think you're getting some pretty good basing in here. And with most of the moving averages starting to tip upward, this thing could get some momentum going. MACD's already crossed the 0 line. RSI has crossed the 50. The squeeze is in a squeeze, and the momentum to the downside has reversed. It's moving higher. I think this thing's just setting up for a decent little move, and it's in a squeeze. As you see these bands starting to tighten a bit. I don't have the Bollinger Bands on here, but certainly that's happening. So I like where gold is, a bit bullish on gold. Copper has been in this long range for quite a while, but it's starting to really get its mojo moving. We're going to extend these lines out a bit here, but look at this move on copper. MACD broke above the 0 line, same time as the RSI broke the 50. We reversed here. We're powering to the upside. Good strong moves to the upside on copper. Pretty good for us from a 112 mode and also a strangle opportunity in copper. And then we talked about bond yields. Now let's just talk about bonds themselves. If we're taking a look here at the weekly, it's just been rolling over on the MACD and the RSI, although the squeeze has been firing higher, which is, again, a little bit of a conflict here. But bouncing off the 21 EMA pretty solidly this week so far. And if we zoom in on the daily here, we have this downtrend line that we ran up into on Monday. We busted through that today a bit. So bonds making that move higher as rates tipping lower a bit. I just think overall, this is really pretty good sideways action. And I think you're in a pretty solid range here. You've got the 3 ATR bands from the bottom starting to come up. You're back down to the 21. I think this sets up really well for a strangle. You've got some bearish indicators on the weekly. You've got bullish MACD, RSI, and squeeze momentum. So you get the bullish versions of those things in here. So let's keep an eye on this thing to the upside. But I think bullish here to sideways on bonds. I think bond strangles really set up really, really, really well here. So there's where we are in futures. We take a look at the sectors today. Biggest losers on the day was certainly semiconductors, followed by biotech on the session, while the biggest winner was oil, financials, energy, and materials here. So I'm sorry, consumer staples on this move higher. Always get that one mixed up. So consumer staples to the upside, and then healthcare catching a little bit of a move in here. Pretty interesting on healthcare, watching this pretty strong move higher. Markets pull back. Healthcare could definitely get this thing rolling to the upside. And then not a great day overall in the market. So you had Apple taking down almost 2% on the session as we're getting into earnings in 2 days on Apple. So selling into earnings, which is something interesting to keep an eye on versus the last earnings where we were rolling up into earnings decently the couple of days leading up to it, even though we had sold previously. So earnings cranked Apple higher last time, but this might be a double top on the weekly. We'll be watching that. But this second piece of a double top, this also looks to be a bit of a head and shoulders pattern. So I think with the neckline being exactly where we are right here, and if we put, if we really draw this thing out, it doesn't have to be exact, and it's probably a little bit off, but if you take a look in here at what's going on, I think you get a little bit of a neckline on this head and shoulders pattern. So you got one left shoulder, head, right shoulder. I think if you break here, okay, you've got down to about the 170s. Earnings is really going to have a lot to do with what's going on here, and we'll keep an eye on the markets as this thing starts to set up. Do we come back down here to this uptrend line? I wouldn't be surprised. All right, Microsoft, this one still setting another new all-time high intraday. So we'll just keep moving that higher just every day. Seems like a new all-time high as we go through this. powering to the upside, but it is definitely overbought on both the weekly and the daily. So this this pullback, and these all look to be weak in the after hours tonight. So you got Microsoft earnings not till the 14th. We got Amazon earnings on the 2nd. This thing also was off decently today, down 1.5% almost. Running out of some steam up here. This was a nice break of this ascending triangle. Nice break to the upside. Now we'll see what happens as we head into earnings. But you're definitely running out, I think, of some steam here. Taking a look at Meta. Now, Meta also 2 days away from earnings. This is also selling off decently, pretty heavily. So this thing's down 9 points in the after hours right now, down to about this 391 area. So it's going to have, markets are going to have a struggle tomorrow a bit on some of these things moving lower. And then we had Google earnings today. And this is really the catalyst for everything. We had run up really hard into earnings on Google. And then what we're seeing here, oops, let me mouse over that a bit for you. Earnings came out, beat on a beat, 1.64. So earnings came out with a beat, but definitely selling off on the news. And we'll see how things move. But ad revenue, I believe, is declining on Google. So that's a reason behind some of the sell-off, is that the ad revenue is declining despite the beat. But this had run so far up that it would have had to have had just an absolutely ridiculously great quarter, and to have any kind of negative news like ad revenue here, that's definitely going to affect stock here. This thing's down to about 142 in after hours. So this is going to take a pretty good whack tomorrow. This thing's going to be down substantially. I think we're looking at being down at least 9 points, or about 5% tomorrow, potentially on the open. So big gap down, heading our way on Google. If we take a look at NVIDIA, it doesn't care. It just keeps moving higher on the day. So NVIDIA up fractionally on the session, but it's just powering its way higher. We got earnings, but not until the end of the month coming up. Tesla, now we got our 3-day in, and I wanted to give it 3 days to see what happens. So you get the drop, and then 1, 2, 3 days. Now today was, they call it fractionally an up day. We'll see, but this thing is down in after hours. So I think you're going to see this thing give all of these gains back to about 185 in here. So this is where tomorrow, I think I'm going to start to, even though I'm not a stock guy, I think this is an opportunity in here. I'll be putting some trades out for people to follow on Tesla on this down move tomorrow. I think you can start to look at Tesla being decently oversold. It's coming off of the RSI oversold. MACD as well, squeeze, flipping. It is going to sell off tomorrow. It's going to put us back down through the 3 ATR on the daily. I think this is a good potential opportunity. Now, am I going to put something here? No, I'm going to go way down to the 160, 150 level on Tesla, but I'll put a trade out tomorrow on that. Let's take a look at AMD as well, since AMD earnings were out tonight, and AMD is going to be dropping pretty well. Now, the actual earnings were good. It was a nice solid beat on earnings, but the forecast was pretty light. So it had been selling off a bit going into this from its recent highs. In fact, I haven't really updated this because not really paying attention to stocks. But this thing tomorrow is looking to open around 161. So it's going to drop all the way to the 21 EMA. You were overdone here. You can see the divergence in RSI was not making new highs with the new highs here. It's been rolling over along with MACD. So it's been rolling over. And I think now that earnings is over, I think you could look at a call credit spread or something on AMD. I think that would certainly make some sense. Nothing on earnings here for a couple weeks on AMAT, but I think keep an eye on how that goes. And I really am starting to like where Oxy is. This looks like a pretty nice double bottom on the daily. it's bouncing off of this very clear support level that we have going all the way back to July of 22. Solid support. This thing's moving higher. MACD, RSI, squeeze, all powering its way higher. On Oxy, I really like where things are on Oxy. Earnings are coming up on the 14th, so we're still 2 weeks away from earnings. Take a look at Oxy and see what's happening there. And then everybody's little darling SoFi. I think everybody thought yesterday that this is the greatest stock of all time since it gapped up from $7 and change to $9, and now it's given all half of that back already in just one day. And tomorrow it's already down in the after hours for tomorrow. So I just still I don't know what the fascination is on SoFi. So if you own it, great. I don't get it. It doesn't make any sense to me why we would be piling into it, except you want to buy a cheap penny-ish type stock that trades around $6, $5, $8, may spike up to 10, then it goes all the way back down to 6. No good stocks are below $10. So I don't know what the fascination is on SoFi, except, hey, it's cheap. I can buy a lot of shares. Okay. And if you bought shares on this run up here, you're holding the bag right now. If you bought shares on this move down here, maybe you're doing okay right now, but you're only up a point here. So, but if you got billions, yeah, it's all good. All right. So there's where we are on that. We'll skip the stocks and let's move into the account and spend briefly a little bit of time here. 259 on Delta when we took the reading here at the end of the day. 1,018 on Theta, 0.24. Decent Theta, could be better, but it's okay. 418, 546, so another new all-time high in the net lick. So we have now hit a new all-time high again this month. BP usage dropped to 227. So we are now at 44.5% BP use. I like where we are. If the market starts to pull back here with some of these earnings, and definitely tomorrow, there's some pullback coming. Now, how big is it? I don't know, but I'm going to think that the NASDAQ is not going to look too pretty tomorrow, which means also that ES is not going to look great, but I think you got to keep an eye on small caps on IWM. We did knock out $1,980 today. Simply all we did was close the naked put on a oil 112, a CL 112. We closed it for 2 cents here, the 94% premium capture. We made $1,980 on that trade. We were in the trade for 46 days, 14% return on the profits there. So if we look at the overall dashboard, we've now collected $20,808 in realized gains for the month. Our goal was 11,000. We've hit 20,808. So we have doubled our projected return for the month. We're at 5.26%. There, the net lick is up 5.8%. We're up 22,998 this month in net lick on a $395,000 account to start the year. So not too shabby. We'll take it as we got one more day to go. But you can see doing well. All the strategies pretty much firing the way they should. And when we look at our strategy builder here, we are pretty much right on the money on most of these trades. So we use that strategy builder to figure out exactly how we're going to allocate our trades. And here's a little bit of a peek as to where we are. So let's take a quick look at trades here. So this was towards the end of the day. It was about 4:30, so it's after hours. So you can see again, decent little update today for us. Net lick finished around 418, 147. This was about 15 minutes later than when I recorded the numbers. So, within $300 there. Our BP is in great shape over here at 229. You can see our bill down here at 41,000 in margin. We control 165,000 shares of that. We got a dividend that'll be coming up in a couple, or distribution, I should say, coming up in a couple days. One of the things I wanted to point out on the account here, when we're taking a look at this particular, it's the main trading account for Income Navigator. You can see we're up 24,000. according to Tasty. That's their PL year to date. Remember when I was sharing here, we talked about 22,998 in net lake. So ours is a little bit lower than Tasty. I'll take the conservative route on what we're seeing here. But what I wanted to point out here is taking a look at the different underlyings that we have in this account. You can see capital requirements between ES and oil are almost identical. And so I think we're decently diversified in there. We've got gold here at $28,000. We've got some copper here, so another metal at $10,000. So, not totally even a third, but you can see that definitely where all our eggs are not in the ES basket. So we've also got a little bit of a remaining trade going on live cattle. You can see NASDAQ down here, which does put us in kind of the same correlation trades as ES has. So you can see that NASDAQ doing really well. If this continues to go down further, you can see we're going to do pretty doggone well. We're up, according to Tasty here, 800% in 6 days on this NASDAQ. So I'm not a big fan of how Tasty calculates things, but we'll certainly take it. Now, $281, okay, it's showing 800% because this is a trade that doesn't cost much, that's up decently. So you can see how Tasty would distort that pretty good. But anyway, we'll take it. Other people probably post that they have an 803% return, which technically we do. I'm not going to be posting that as a highlight on the thumbnail here for YouTube. And then on bonds, we've also got $23,000 in bonds working, and then $41,000 worth of Treasury bill ETFs. So I like the diversification that we have. We're in pretty good shape. You see, again, BP usage is only at 54, including bill. So you take this 41,000 out, which is about 10%. We're at 44%. Well, I think really good situation here. Delta not too out of control, 256 on Delta, which when we showed you the overall account here on Delta, that puts us at about 0.06. So you're really pretty Delta neutral overall. So that's something to keep an eye on. Let's take a few more minutes, even though we've been in this for a while. If you're still hanging with me, let's go back to the account, and not as after the after hours trading. Let's take a look at how things look in the after hours trading. So here's the account that we were just in. You can see where we are in after hours. So oil, you can see here, and here's the activity for the last 2 days. So you can see yesterday, these are those 2 0 DTE trades. So these 2 0 DTE trades that we put on here that we took off for 50% winners. You can see those. You can see that we put on a gold put credit spread here yesterday. And then today, here's where we closed that the oil naked put for 2 cents today around 3 o'clock in the afternoon. So that's where we are on activity, which matches up exactly with the spreadsheet. So I'm giving you guys all of my trades live. At the end of the day, you get a good accounting. So what did we do here? Well, one of the things that we did on this oil trade was we took the naked puts off. So we have this put debit spread that's still on. It's got 15 days to go. We could potentially make some moves like closing off this short put as well and just leaving this long one on for a hedge. But I am bullish on oil, so I'm not really making any kind of a play there. If we take a look at this oil futures expiration, we've got a 112 trade here. Nothing to adjust on this one. We've also got a 49 DTE ratio spread. This thing is up 22% in 5 days. So a nice spec trade for us. So a nice ratio spread trade there. Here's some more oil trades. We've got this triangle working. This thing's up 37% in 22 days, working great. There's another ratio spread. It's up 36% in 9 days. Here's a 112 trade with a higher PDS in it. This thing's up 30% in 5 days. And if oil pulls back at all to 74 and it's at 77, so not a far way down, but with the bullish trade, it's still a good trade. And then we got a strangle down here on oil. This thing's only been in for 5 days, up 3%. So I like where we are on oil. So nice strategy diversification. When you look at this, you've got 112s, you got ratio spreads, you got strangles, well diversified along 3 different expirations with 3 different strategies. So I like diversification by strategy, by expiration, and potentially by underlying. That's how you diversify. That's, in my opinion, how you set up an account to withstand. So if the market really continues to sell hard, you've got diversified assets in a variety of areas. And even on ES, we're going to diversify by trade. We're going to diversify by expiration. You can see there are 2 different futures expirations going on in ES right now. We do have a long put of a 112 about to expire tomorrow. We've got a hedge on tomorrow. It's totally fine. We put these on for 60 days. We've been in for 54 days. And this thing will expire in 3 days, but it's there to provide, I don't know about black swan. I'm not a big black swan guy, but any significant down moves this hedge would have protected. He'll have more of those on. Got a BA 112. This is tier 1 of that trade. Nothing to really do here, but maybe we'll consider this short put soon. We've got another 112, just the long puts left of this. So this is now a totally total hedge long put. Here's tier 2 of the BA 112 trades that we have on. This thing's doing fine. These are not high income trades. These are more hedge style trades if the market gets moving to the downside, and we'll see what happens. We've got a standard 112 trade on there. We've got another long put. So again, we just got plenty of these long puts just sitting in here acting as hedges. So we're doing pretty well on those. We've also got a standard 112 here, nothing to do. A long-term 112 here, getting close to taking some things off and making some adjustments. We've also got another ratio spread going. So again, we've got long puts, we've got hedges of long puts, we've got the BA, the big ass 112s that are more like hedges. So another long put. We've got 112s. We've got the long puts of another 112. We've got a ratio spread. So we are really diversifying across a lot of different expirations with a lot of different trades. Again, diversification to me is key. It's going to help a lot if anything happens in the markets. I think being diversified by strategy, by underlying, and by expiration is going to help you. And then having puts on as well is definitely going to help you out. But this ratio spread up a nice 37% so far. Again, another long-term 112 in this expiration. We got another 60-day hedge working here. So we got more hedges working. And these are all free, paid for the most part, except for, these I buy. But I can more than pay for them with 0 DTE winnings and such as well. So we're offsetting the cost of those. But it's the cost of doing business. Okay? You got to buy insurance. And you got to hedge yourself, and you got to, really start to model what would happen if things start to go significantly against you. 112, another BA 112, another long-term 112. This one's a pretty unique one. This is a 1121 trade that we have on. This trade was modeled after Andy in our group put on. I wanted to trade it with him here. So this thing's doing just fine. Essentially, this extra 2 puts down here, it's of the 1121. This is the extra 1, which is technically 2. This is just a buying power help. So that's totally fine. And then we got another long-term 112 here. So all in good shape there. Gold, what do we got running on gold? We've got a put credit spread that we put on. So that thing's working on gold. And that's up 20% in 2 days. Here's another unique trade that we did. It's a 2112 trade. Again, there's all kinds of different variations you can do. This is kind of one of my own making. There's a reason for this trade. I covered it pretty in depth with our members today, why we did it this way. But this actually has a call in there. So it's a 112 with a call. So it's like a strangled 112. In gold, this thing's up 5% in 9 days. There's a reason for that trade. Then we have another gold strangle we just put on. This one's down fractionally with gold making some highs. Here we go on copper. We got a 112 trade in copper. This thing's up 76% in 44 days. Here's a strangle. This thing's just flat, down 1% in 15 days. Nothing happening here on this particular strangle. These will start to cook in a little bit. This is the put debit spread on live cattle. Then NASDAQ. So what do we got working here? We got a 112 trade in NASDAQ. This thing's up 90% in 40 days so far. We're pretty far away from our PDS, but we're getting close to maybe taking some stuff off. We'll see what happens. Then down here, we've got another BA 112 trade. So this is a unique BA 112 we did on NASDAQ. We did a very high PDS in this BA trade. We are up, again, no, now it's 772 only, but it costs us $1.75 to put, and that doesn't cost us, we make $1.75 to put it on, but it's doggone close. I mean, we're down 135 points on the futures right now, which is off of the lows of the session, but you've seen 100, 200 point drops in the NASDAQ. We are right now 180 points from this trap. And we could definitely see ourselves starting to eke into this trap. The trap here is already paying off. So we're already making money on the put debit spread, and this trade's only been on for 7 days. And then on bonds here, we do have a 112 trade on in bonds. This thing's up 150% in 26 days, sitting nicely where I like it here. We also have a strangle working. This strangle is only 5 days old. It's up almost 7% already on this. I just wish we had more expirations. I would do more strangles. I love where bonds are to be strangled. So I think that's something to consider taking a look at out there. So overall, I think these are good looking trades. I think we're in good shape here. We are going to turn a few of these ES trades. I'm just waiting a little bit longer, but I am going to turn a couple of these into giant ratio spread hedges. So it's one of our adjustments that we'll make. But overall, there you go. There's the account. You guys have seen it now. And we went in depth with this today, and we went through trade by trade and made some moves and talked about why we put on those trades. So if you want to find out the whys, come and join us in the Discord. If you're learning, great here. Fantastic to you. I hope you're getting something out of this. And if it's paying off for you, like the YouTube channel here. So like the channel, click the like below. If you're not a subscriber, what are you waiting for? Subscribe to the YouTube channel and learn something. Okay. You may not love everything that I do, but if I give you 1 or 2 areas of something that you can try and make better, or it gets the brain thinking, that's all I want to do is show you that not only should you diversify by underlying, but also by strategy and by expiration. That's going to help you if any kind of a sell-off comes. You can also see that we have a lot of long puts on. We have a good amount of hedging that we have on. We're going to make some adjustments tomorrow and create some more unique hedges. If the market's selling off, we'll see what happens. But right now, AMD and Google, first 2 out of the gate, not looking too hot, bringing the market down. What does that hold for the Apples, Microsofts, Amazons of the world? We'll see what happens. But if those all start to go south here because you've had such a run up, which means the expectations are super high, if you don't have stupidly high results, your stock's going to sell off because the expectations were just a bit high. We got a Fed meeting tomorrow. It should add some excitement, add some volatility to the market. Right now, IV and VIX are still dead as a doornail, but we'll see if the Fed can spice things up or if earnings gets things moving in the other direction. So if you like this, again, like it. We'll see you guys in trading tomorrow, and take care, everybody. Stay safe out there. Stay warm. Bye-bye.